Hey folks, this is Colin Richards, president and founder of Lord & Richards, and I'm excited to be talking to you in this segment of the Lord & Richards show about what's happening to the banks. And I could really put that in a question. What is happening to the banks? This is one I've gotten a lot of questions about. And as a matter of fact, at Lord & Richards, we, of course, communicate proactively with our clients and have sent out communication about our thoughts on this. And I'd like to share our thoughts with you in case perhaps nobody's really talking to you about this, who's also looking out for your best interest. You know, at Lord & Richards, I'm talking to people every single day who are concerned that events like what happened to our banks, events like what's been happening in the markets, in politics, in geopolitical conflicts and wars, they're concerned that these kinds of events are going to mess up their retirement. And I know probably many of you are as well. And so what I want to do is help you understand the critical importance of building a plan in advance. Okay, now you say, well, we're in the middle of various crises. Is it too late? No, it's never too late. But how much more important now, seeing the dangers that are out there, to build a plan so you can be financially independent, creating a kind of economic bubble around you and your retirement so you can do amazing things with the resources God has put at your disposal. And so today we're talking about the recent failure of two banks that were seized by regulators. Last week we had Silicon Valley Bank, the nation's 16th largest bank, seized. It was declared insolvent after it couldn't satisfy withdrawals by depositors on last Thursday and Friday. And of course, this was a result of a number of things. We also saw Signature Bank then follow because of its exposure to some of the issues that were related to Silicon Valley Bank. Silicon Valley Bank lent to a lot of startups, venture capitalists, tech companies. And these tech companies, startups, venture capitalists relied upon the ability to finance their operations. And guess what the government's been doing to the ability of businesses to finance? Well, in order to slow down our rate of inflation, which, by the way, is only a bad thing, their solution of raising interest rates is only a bad thing if you're borrowing money, right? So the government started raising interest rates to slow down the rate of inflation, thus negatively affecting borrowers. Now, people like the clients at Lord & Richards, we're benefiting from the rise of interest rates. We're teaching our clients how to use high interest rates right now to really benefit and to lock in some really great long-term benefits in their portfolio. But for these borrowers, they had to turn to what they had, which was the cash in the bank, in order to keep operations going as the government started to tighten the ability of businesses to expand through lending. And so that meant banks like Silicon Valley got really shortchanged, right, as people pulled out their money to take care of their bills and their payroll. The bank then had to turn around in order to satisfy those deposits and sell many of its low-yielding treasuries. And those treasuries have dropped in value, right? Because if you've got some ratty old low interest treasury, and now the government's paying more interest, you got to offer a premium to potential buyers so that they'll take that off your hands, right? So often losing as much as 25% or more on those investments just to satisfy the needs of these companies who had to pull their money out. They also tried to raise cash by selling stock, and that backfired. Watching their stock value drop because, of course, people are saying, what is going on? So they had to do the selling, and therefore other depositors then began to lose confidence and withdrew their funds, causing the bank to fail. It's literally a scene out of It's a Wonderful Life with Jimmy Stewart. Now, bear in mind that the FDIC insures deposits up to $250,000, but many of these customers were businesses that had much more than that. Now, the government has come in and said, we're going to waive that, and we're going to make sure everybody gets their money. And the government's done that in order to instill confidence, because what the government is trying to do is stop a run on otherwise healthy banks because depositors get emotional. And this just happens, right? And if you're out there fanning the flames of emotion, you're literally doing your neighbor a disservice, right? Because the bank that they're in may suffer because you're inflating or politicizing what is going on. This really just has to do with simple economics. simple economics. You can blame the government, you can blame Biden, you can blame anybody, but when the government raises rates to cool inflation, this kind of stuff happens. You say, well, they shouldn't raise rates. Well, then take a look at what happens to your household budget when your wages don't keep up with your cost of living because inflation is growing at a faster rate than your budget, okay, or than your income. So as a result of the exposure that Signature Bank had in New York, regulators also seized them, and they plan to make them whole as well. So we're all good, right? All good. Well, the question really is, okay, this exposes the vulnerability of our deposits at banks. And yes, we should work within the FDIC insurance limits when possible, and there are creative ways to do that. But in our next segment, we're going to talk about alternatives to banks for investments, because many people are just parking money in the bank because they don't know what to do with it. And we've got a lot better idea about how to do that and how to approach that safely, right? Because we put our money in the banks to get safe. Generally, we're not looking for great growth. Do we have a larger banking crisis on hand? We don't know. We don't think so, but we're going to stay tuned on that. But markets don't like negative headlines, so people are also seeing a lot of instability in the stock market, right? As people are concerned, bank stocks, whether they're involved or not, are getting cratered by investors, and so we need to keep an eye on that, right? And that again heightens the need to say, well, what else can I do besides put my money in the bank to protect me from all of this volatility going on in the markets and our financial system? Well, what we can do is we can look to other safe places to put our money that have traditionally provided investors opportunity for growth, but safety at the same time. If you'd like to talk to me about how we can do that, we can visit together. It starts with a simple phone call where we walk you through our process called a financial independence review. I'd love to chat.